Okay, Trepp, housing becomes a luxury good. Good news for apartments.
Yep.
Matt, bring us up to speed. What's going on? I mean,
So
every person needs a place to live. Is housing really a luxury good these days?
I'm pairing this article from Trepp with another piece of data from NAHB, and this kind of follows a couple of weeks where we have been following the single family home price growth declines. So there's like a softening in the single family home for sale market. And this article still kind of reemphasizes that housing, specifically for sale homes, are becoming this luxury good. Right now, what this graph shows right now is how it has become increasingly difficult to qualify for purchase of a home or for renting a home. I had to wrap my head around this a little bit. I had to spend some time thinking about this because at first I was like, wait, is this rent to income? No, no, no. This is, I guess, just to qualify to pay rent. Right now, you have to be making 71% of median household income just to qualify to pay rent. That one makes me raise my eyebrows raise a little bit when I see a number like that. So I'm not really sure of how accurate it is. But what they are tracking is this progression from 20 years ago. You needed only 37% of median household income to qualify to pay rent for the median apartment, and then now it's a little under double, so 71% of income. And compare that to buy a home, you needed in 2005 87% of median income to qualify to purchase a home, and now you need 152% of median household income. But I think the real increase wasn't from 2005 to 2025. It was these 4 short years between 2021 and 2025 when it went from 90%, which is only 3% more than it was in like 20 years
Yeah.
ago. So it went from 90% all the way up to 156% in like 3 short years. Now it dipped a little to 152, but still the biggest increase happened in the shortest span of time. I think that it was a kind of perfect storm of high mortgage rates and high home prices that is still there, and that gives credence to this conception they have of homes as a luxury good. I'm just going to kind of scroll down to the bottom here. Is they say if one accepts the premise, or as we postulate the reality, that housing is now more of a luxury good than pure necessity for purchase, then one needs to expect consumer spending dynamics to act accordingly. Higher quality, more scarce homes and apartments for sale will command higher and higher prices. The more commodity the housing unit, the more its price, value, and rent will fluctuate with local supply, and that means faster rent growth, but also or price and rent growth, but also higher downside sensitivity. They don't say it specifically here, but I think that they are positioning multifamily and rental housing as a commodity good and purchasing homes as a luxury good. It kind of makes sense in that, like, this is scarce volume, sales volumes, high prices that are kind of persistently high, and like there's not a lot of it. So that makes sense for home prices. I just don't think that multifamily is as much of a commodity as they are saying in this article. I think that there are plenty of luxury multifamily homes that can maintain persistently high prices. Also, the different construction story for single family homes and multifamily homes makes this a little bit difficult. It's not so easy a division between luxury and commodity.
It's
But
a
yeah.
really interesting concept, Matt, to think about. I mean, we're really talking about elasticity here, and
Mhm.
typically housing is pretty inelastic, but certainly there's always been luxury real estate, and there is a part of the market that is quite elastic, and in terms that it has, price affects demand considerably. If there's a downturn in the economy, well, again, people still need a place to live.
Mhm.
Rents might decrease by, marginal amounts, but there's still a significant amount of demand there that keeps prices, relatively in check. But if you're talking
Yeah.
about the highest end of the market, unless in a scenario where that demographic is somewhat shielded from an economic downturn, but we've seen in economic cycles, luxury goods demand decreases when we see
Yeah.
economic turbulence and an economic downfall.
Yeah.
Float certainly seems like a luxury good and a type of
Yes,
luxury housing.
that's true. That's a really
Again,
good point.
it's just one example, but
Yeah.
we call it renters by choice, renters by necessity, or I'm just thinking about our portfolio and the history
Hmm.
of our portfolio. Just for some anecdotes, we clearly have some product type that would falls more into the commoditized real estate. That is
Hmm.
highly inelastic. That is just we're serving more workforce housing. We kind of the two buckets that we focus on is kind of either being like the best B in the market, kind of call it like B plus, really solid, high quality, high value workforce housing, still highly amenitized, but a little bit older. But then our even more highly amenitized Class A product, really kind of
Hmm.
core plus investment strategies. Now, even that core plus product is relatively inelastic because we're not at the absolute top end of the market. But we have some units at some properties that they've either gone through like an ultra premium renovation, or I got a property salon in Indianapolis, Matt. Some of
Hmm.
those units were built originally as for sale condos or townhomes. So the floor plans are very large. There's custom cabinets, custom countertops,
Yeah.
3,000 square foot units. There's a relatively narrow subset of demographic that's looking for that, but it's a huge demand. It's a luxury item. But
Yeah.
if you're looking, you've got the money to spend and you want to rent a place and you want a lot of room in a nice place, there's not very many around. And so it's all of a
Hmm.
sudden treated like our luxury good. There's a ton of demand, and we get some of the most massive rent premiums on some of those large, ultra expensive units. But
It's gonna be
if
different
we're
for
in a
different markets,
scenario
I think.
where if a different market with the economy's crashing, or
Yeah.
certainly a different geography,
Yeah.
not going to fare as well. Fortunately, we have a very small percentage of those floor plans, at that one community. So it's not like all of the eggs are in that type of demand bucket. But it's clear, we talk about those types of rentals and the demographic that searches from highest to lowest. When you filter prices, most people, your average person, filters from lowest to highest. Show me the cheapest stuff first. What can I afford?
Yeah.
Beyond just like the normal filtering, there's certainly part of the population. It's like, I want to know what the nicest thing you have is. What's the most
Hmm.
expensive thing you got? Now, nicest and most expensive aren't always the same thing, but to get there quickly, you're searching from highest to lowest. They want the nicest thing available. I've got the money to spend. I'm only going to be in this town for a year. Or what often happens, oh, I've just gotten divorced. I need a place to live, but I'm left my single family home that I own. I want to rent a place. I'm going to be bringing my kids over. I want it to be pretty nice. So I'm going to look for a townhome or a really nice apartment.
Yeah.
So clearly the demand's there, and that I see much more as that luxury good.
Yeah, yeah. I think that makes sense. And Trepp has actually also identified a couple of implications for this idea of rising home prices and homes as a luxury good. A lot of them we've talked about, specifically the continued demand for apartments in the face of rising single family home costs and the purchase cost. But also, I I'm kind of interested in what they say about geographically and shifting preferences based on like moving to more affordable locations, basically. I think that
Hmm.
they conflate moving from one location to another with moving from within, but maybe they don't. I think that it's a similar impulse that basically, if home prices are more expensive, you want to go somewhere where it's less expensive. It's a little bit different though to move to like a suburb that's an hour away from the city to get a cheaper house than to move from an expensive city to another to a less expensive city. I think as we had as we had mentioned on the Gray Report a few years ago, the more likely move is a movement from downtown to suburb within the same larger metro area versus moving from market to market, from city to city. However, I'm sure that there is a little bit of in-migration because of affordability. It's just something that we'll have to watch.
Sure.
Yeah, a little bit of counterbalance between that and the South. But South is becoming more cheap, a cheaper place to live if they keep building apartments there. And that was something else I was thinking of. Luxury apartments may be a premium in certain places, But if they've built a lot of luxury apartments, then maybe rent growth goes down. If all the new apartments are luxury apartments, then that's a little bit more of a elastic pricing.
Oh,
Just because of the
there's some
supply
deals.
dynamics.
Matt, right now you go down to Austin, you can get some sweet deals on
Yeah.
apartments. I mean, it was like early on in the pandemic, those pandemic specials, especially in the big cities like New York City, they were almost, rents were being slashed. They were almost
Mhm.
giving the apartments away. I mean, I remember, again, this was before the prices just spiked up. I mean, remember there was that period where everyone was like, we don't know what's going to happen.
Yep.
Everything is, crashing maybe. My first experience was went to go buy a new car for my wife Alex, or we were leasing a car. We were just like looking at the options and went in thinking, hey, I think we're going to have some negotiating power. And they're like, we don't have any cars. Like
Yeah.
everyone's buying cars. What are you talking about? Well, there was that but even before that, I mean, I remember we were able to go and rent, incredible, suite at a hotel down in Miami for like,
Oh yeah.
I mean, it was like fraction of the cost what it would normally be. This
Yeah.
incredible room, because no one was traveling. They were almost giving the rooms
Mhm.
away. They're just trying to solve for occupancy. Um, that only lasted so long,
Yeah.
and so yeah, I think everyone needs to kind of remember what's happened in the past, and going back to kind of the causation of all of this, and what we've talked about
Mhm.
before, Matt. We've said, single family home prices are so high, rents, the spread is so wide. Something
Yeah.
needs to allow those numbers to converge. It's either going to be interest rates come down, rents spike, or single family home values decline. Now it can be a combination of those
Yeah.
things, but with interest rates staying steady, rents are growing a little bit in some markets, flat and others, negative in others. The only thing that's going to give is home prices coming down
Yep.
somewhat. The challenge is there's only been so much inventory, and there's enough demand to meet that little bit of inventory. But again, if nothing changes, those valuations, I can see them stepping down or at least having resistance for significant further growth.
Yep.